Hey, Robert. So thanks for joining us today for our inaugural virtual coffee with Software Equity Group. So
Good to see you, Alan. It's been a long time, my friend.
yeah, so hopefully you got your cup of coffee there with you.
Well, it's actually afternoon here, so I've got a glass of water. So I was not smart enough to get a cup of coffee. Sorry.
Okay, well, that works for us. So I thought this would be interesting. Can you see my screen?
Oh, yes.
Does that take you back to a different time?
Well, yeah, when actually we had air shows. So unfortunately, all the air shows so far this season have been canceled. I've been flying a little bit and practicing, but we've got no air shows to go to for the foreseeable future, unfortunately.
Yeah, so this is one of my favorite testimonial pictures that we have on our website. So for those of you that don't know, Robert and we worked together probably, it was about 2 years ago. I think we closed our deal in July of 2018 with Level Equity. So maybe Robert, as we get going here, maybe you can go ahead and just provide a quick introduction to yourself, and then we'll go and get into this. And really the purpose of this session is 5 minutes. Just talk about what's going on and how we at Software Group can help give back to others. And you were gracious enough to offer your time to do so. Obviously, with your focus on customer support, I thought there's some really good topics that we can get into that'll be beneficial to other SaaS companies. So with that, why don't you go ahead and provide a quick intro?
Sounds good. I'm Robert Johnson. I'm the CEO of TeamSupport. We are a B2B focused customer support technology platform. As Alan said, we did a private equity transaction with Level Equity just about 2 years ago, and it's been a great period of growth the last 2 years and a lot of fun. I've been a serial entrepreneur my entire life, primarily in software and technology, but a little stint in oil and gas as well. So kind of had a non-traditional career path, but having a lot of fun with TeamSupport right now.
Awesome. So for us at Software Equity Group, one of the things that's just been vitally important for us and the companies that we've been working with over the years has been retention. And you guys are obviously squarely focused on customer support, customer success, serving many SaaS businesses. Retention is everything. Retention, in my opinion, is critically important in today's market. What are you seeing right now, and any best practices that you might be seeing amongst your customers that could be of value to the audience?
I think you're exactly right. The focus on retention. It's both retention, but also net expansion as well. So we look at a number of different metrics in our company, including obviously new logo sales, but also expansion and then churn. And the goal is always to keep the expansion larger than the churn, so you have net negative retention. One of the most important things there is just, it's going to sound simple, but just keep your customers happy. And that's something that our platform allows us to do and allows our customers to do as well, to be able to have that relationship with the customers, obviously to support them and to manage that process, the customer support process, but also to understand the broader relationship with those customers with the idea of understanding who is at the most risk for churn to be able to apply some resources to them so they don't churn.
Yeah. And I think that's even more important today. I mean, if you look at the three variables that make up the equation for net retention, you've obviously got lost, right? Customers that you're going to lose. You've got customers that are going to contract, and then obviously you've got customers that are going to expand. I think the focus needs to be very much on all three of those categories. But the one category that you think you would spend the most time as a software operator for your customers?
I really think it's all of those, expansion and churn reduction, and then just kind of broadly downsell reduction as well. Mm-hmm. We generally look at it, we categorize churn into a couple different buckets, and essentially it's, was it preventable or not preventable? And we've had customers who have gone out of business the last 66 weeks just because of the economy, and that's something we can't control. We can control when customers leave and go to another platform. And I think that's true of every SaaS company. You've got to look at the controllable churn and the non-controllable churn. And we also look at customers for potential for upsell. And we actually have a lot of customers that have grown in the last six weeks or so because they're heavily involved in logistics or telehealth or those areas that have been just booming the last few weeks.
Mm-hmm. I would expect though on some of the the lost customers, for many that were thinking, maybe I am dissatisfied with my software vendor, maybe it's a time to switch, pre-COVID-19. Right now, adding that element of change into the mix seems to be something that could be potentially more challenging or trying than they may want. Does that create an opportunity for SaaS companies today?
I think it does, and I think you're right. We're seeing right now kind of a great pause in capital expenditures. Projects that were on track are a lot of them, not all, but a lot are paused right now. And that certainly hurts companies like ours on the new logo expansion side. That's, again, I think we're seeing that across the board. We saw that in 2008 as well in the industry. But you're right, it does provide an opportunity. If we had customers that we thought might have been a churn risk, I think we've got a chance to essentially re-win those customers. And that's, I think it's an interesting thing to look at and also very important. We're always trying to re-win customers, but I think we do have a little more runway now because of people pausing and not looking to shift vendors right now. How long is that going to last? I don't know. It'll be interesting to watch though.
Yeah. Do you see the COVID-19 impact changing the customer support department going forward, and maybe even the importance of the customer support and focus on retention levels?
I think we've been seeing that change the last probably decade or so. There's been much more understanding of the importance of customer support, especially in SaaS or subscription businesses. 10 years ago, when we were talking more enterprise software, it was considered really more of a cost center. Today, I think it's considered a necessity for most companies, since we do understand that the concept of retention is critically important, again, especially for SaaS and subscription economy companies. I think we're also seeing a big push into customer success. So you look at support as really the reactive side of the break fix to some extent. And generally speaking, support's only talking to a customer when there's an issue. And in customer support, we can measure distress because we know customers are unhappy, but we can't necessarily measure health because they're not talking to us. Does that mean they're unhappy or happy? We don't know. So you look at the world of customer success, and that kind of turns that same relationship on its head. And that's really the group that is proactive going into customers and essentially saying, hey, how are you doing? How can we help you? How can we make you happier? And those two departments and two technology platforms, in some cases, really work closely in concert. Support for the break fix, success for the relationship building. And that the combination there is really powerful.
Absolutely. We'll often say if a prospect were to come to Software Equity Group and it were to be, hey, 100 net, maybe 30% revenue growth, and let's say 100% on net retention, or alternatively, a company that's got 105, 110% net with 15% revenue growth, 20% revenue growth. What would you consider? What would be more attractive? Now, I'll take the company with the higher net retention all day long. And that's because I believe that both the private equity community as well as the strategic buyer community, they believe that they can enhance and grow the net new sales and expand the business on the revenue growth side. But it's a true indicator of the company's health when you see these high retention levels. So are you seeing anything? Are you seeing anything amongst either your customers or within your business as it relates to staffing and things that might change today, or suggestions that you might make to SaaS operators today about what they could impact within their business, or what changes they can make in their business around staffing, perhaps with a more of a focus on customer success, customer satisfaction, retention, et cetera, maybe shifting employees and personnel. What do you think about that?
Yeah, I think you kind of said what I was going to say. Double down on support and success. That's, if you're looking to cut, for example, I don't think those are areas to cut. I think that's very, very short-sighted. It's going to be a lot easier and a lot more long-term beneficial to keep customers, both keep customers happy, but also just actually keep customers with customer success and customer support than to try to go out and get a new logo in right now. Now, again, how fast is this going to recover? We don't know, but certainly trying to make staffing moves, trying to make reductions in either support or success right now, to me, doesn't make any sense.
Mm-hmm. So speaking about recovery, what's your prediction? I hear people talking about
what's my hope, or what's my prediction?
Well, I think I would like what's your prediction, and nobody has a crystal ball, but we talk about this V, we talk about a U, we talk about an L, which nobody wants. my mentor and friend at Kent Hudson, who was the founder at Dude Solution. I've heard him talk about a Nike swoosh. What do you see?
I think the swoosh, or maybe I think the swoosh has got more of a slower down curve, if I remember the logo correctly. We know the beginning. We know it was the first half of a V was the beginning. The economy basically stopped worldwide in a very short period of time. And I think the closest analogy is probably 9/11 from an economy standpoint. Just everything stopped. And obviously the question is, how fast will things get going again? I think a month ago, we were all hoping for a V recovery. I think today, the kind of Nike swooshish, the slower but steady recovery is going to happen. Good news is the world economy and certainly the US economy was in very, very solid footing before going into this. So the fundamentals are there. The question is going to be how fast will the consumer start spending again? How fast will business start spending again? How fast will business travel start picking up again? It's fascinating to look at the public markets, both the equity markets and the commodity markets, as a predictor of what's going to happen. And the oil markets are all over the map. We saw it go negative at the end of last month with future contracts. For a while, we were the August and September oil prices were $10 to $15 ahead of what they are today. And I used to be in the oil business, so I do watch that still. And it's a very interesting predictor of where the economists, or at least where the traders think the economy is going to go.
Yeah.
I think it's going to be a steady but relatively slow recovery going into Q4, Q1 is my best guess. When will it recover back to where it was early Q1 of 20? I don't know. That's probably a harder question.
Yeah, so I think ultimately what that means is we all need to be planning ahead so that we're not caught off guard. Which obviously leads me to my last question for you today. And I'm assuming that it's going to have a cash answer related to it. But if there was one piece of advice that you were to give one of your peers that's operating a SaaS company today, what would it be?
One piece of advice is tough. I'll give you more than one. I can't give just one. You're right. Cash conservation and cash planning is always there. You've got to, if you were planning on 40% growth, that's not going to happen this year, at least based on what we think today. And so you've got to make sure you're, from a cash perspective, an employee perspective, you're right sized to accommodate for what's likely going to be a slower growth year. The other thing I would say, though, from a more strategic standpoint is, and this is where I sit as CEO, I've got to be thinking 18, 24 months down the road, is what can we be doing today to position the company to come out of this stronger? Right. Whether that's a cash conservation, whether it's hiring, whether it's finding the right team, whether it's potential acquisitions. There are always things you can do and potentially deals to be made in any economy that might be really beneficial looking forward 18 to 24 months. So I would say take advantage where you can. Do make sure you've got cash and make sure you're right sized and right plan going forward. But be thinking about where you want to be in 18 to 24 months.
I think that's great advice. So thank you very much, Robert. We appreciate you joining us today.
Always good to see you.
Yeah, likewise. And
hope to see you in person soon.
I would love that. And I'm looking forward to sitting in the back of that airplane one of these days.
Open invite. I've been asking you for 2 years now.
Hey, I know. I got to make it happen. I'm just a little scared. Robert, thanks so much. We really appreciate it. Thank you.
Alan, great talking to you, my friend. We'll talk soon.